Excited you could be here because today we're diving a bit into a topic that I bet you know nothing or very little about, because I know nothing or very little about this topic as well. And it's basically how an 831B can actually help protect your business. Now, with us today is Clay Ogden. Now, Clay could easily be described as the ace of this SRA team. In his role as National Business Development Manager, Clay does it all as he interacts with business owners and advises to identify risk and management solutions. Now, as a former professional golfer on the nationwide web.com, Canadian, and mini tours, Clay nurtures many of his business relationships on the course and brings more than 12 years in risk mitigation to identify opportunities and consult with clients and representatives. Clay, thanks for joining us today.
Thanks for having me.
Yeah, I'm excited you could be here. Personally, I know very little, if anything, about this. So let's start with the beginning. What the heck is an 831B plan?
So an 831B plan is actually a piece of the tax code that's been around since 1986. Really was started to help small business owners, even farmers, really be able to set aside excess revenues for crop insurance. And the way it's kind of evolved is it's really a way for a small to mid-market business owner to take excess revenues, excess profits out of their business, set those dollars aside for kind of the uncommon, unforeseen, uninsurable types of risk, of which over the last 2 to 3 years, we've seen lots of.
So give me an example of this. Like when we talk about like unsurable kind of risk, like what are you referring to?
So things like brand and reputation damages, supply chain interruptions, start looking at things like a dispute resolution policy for someone bringing legal action against the business. Start looking at things like loss of a key employee to an accident or illness, or business interruption type policies for losses in revenue due to things outside of your control. Political risk events, government bodies deciding who's essential and non-essential and causing some closures, and lots of different events that obviously over the last 2 or 3 years with all that's gone on, there's been a lot of different scenarios where businesses have just had a loss of revenue or things come up that are completely outside of their own control, or maybe a third-party business interruption, right? I use a third party to run my business, whether it's a manufacturer, supplier, or just a software of some kind. They have an interruption. My traditional insurance isn't going to cover that, but I'm going to have an interruption of my business and I'll dip in my revenues.
So let me ask you this. Is an 831B specifically for stuff that there is no insurance policies for? Because, like, for example, there are key man insurance policies if, something were to happen to, a key member of like a C-level team, or there's E&O or errors and omissions insurance, for example, for somebody that, might do something, mess up, say the wrong thing, do the right thing that could adversely affect the reputation, they get sued. So is an 831B strictly for the things that there is no insurance for?
Yes, and or filling in the gaps of those, right? There's a lot of scenarios where maybe E&O doesn't pick up and it's left to the business owner to just bear the brunt of with after-tax dollars in their cash flow, assuming it's there when they need it. And so using this types of a program, when you have the ability to take a little bit off of the top and set it aside, and then kind of pivot to those reserves that you've built up in a time of need, is really where these programs are supposed to be.
Makes sense. So in a typical scenario, let's say I have insurance, I'm insured to cover the things I think I can cover. You and I both know there's exclusions in those policies. There's things that they don't cover, which is where we've got to fill the holes. There's stuff you just can't even get insurance for. Then the question becomes, what is the difference between 831B, the benefits it provides, versus just, let's say, putting it in a savings account or putting it in a 401k or a whole life policy where I could borrow against the whole life policy if I if I need the money? I mean, what's the difference in the benefits of an 831B compared to those other options?
Yeah, no, it's a fabulous question. So a lot of the benefits of the 831B is anytime a client puts dollars aside, those dollars that they're putting aside are becoming a tax deduction to that business, right? Anytime those dollars are now set aside and we issue policies to that company for specific risks, they're going to have these policies in place for a 12-month period of time. Once that period of time ends or those policies expire, all of the funds that have not been used for any kind of a claim are now available to the business owner to take dividends from, which is coming out to them as a long-term capital gain instead of ordinary income. Or they can borrow from those dollars and be able to use those funds by way of a loan as a shareholder. And, it's obviously not taxable at that point in time. They're just borrowing it from their own 831B. And then when and if there is a claim, the client's going to have 200% more funds to manage that very same risk that at the end of the day, they're going to manage anyway. And so it's all about bringing more efficiency to how we're managing these risks while creating some potential tax advantages at the same time.
So what are the tax advantages? Like and that makes sense. If I take a little bit off the top, right, then I put it into an 831B. And then that way, if something bad does happen, then I have this whole other plan that's there just specifically for this purpose. The money sits there for a year and it's not used. Well, then I can at least get dividend, I can get dividends. I as a shareholder, I can get payout on that money. So it's not sitting there, without being able to be touched. That makes sense. But the question becomes, like, what are the tax benefits? Because I would think probably one of the biggest reasons or benefits you do this would be tax benefits. So kind of give me a breakdown of how that looks.
Yeah. So, I mean, a lot of the times, the intrigue to the client, the tax benefits they're obvious, right? If I can put aside $300,000 or $400,000 out of my gross revenues and set that aside into my own 831B, that becomes deductible to my business in the year that I contribute it. Okay. That's pretty substantial. Being able to essentially cover these risks with 50% of my own money or all of my own funds plus all of the program is going to contribute to how claims are paid out. So now instead of having, $100,000 in my bank account with after-tax money, and I'm going to own 100% of a potential risk, if there's a claim, now I have $200,000 to manage that exact same risk coming from, from the risk pools and all the different stuff that go into kind of going into the weeds a little bit. So it definitely increases the amount of coverage and the efficiency because it's no longer just me, filing or managing a claim. It's everyone inside of the program. Okay. All those dollars become deductible up front. We're now going to manage these risks with a lot more funds, if you will. The tax advantages, I guess, on the backside is when I get after those policies end or expire, I can pull those dollars out as a long-term cap gains dividend rate, as opposed to my ordinary income rate, right? So a little bit of a tax arbitrage there. I have the ability to loan and borrow from those funds after the policies end as well. So haven't picked it up as income yet, have the ability to use the dollars. It's a extremely efficient way of managing risks that you cannot insure. And at the end of the day, every business owner is going to manage them one way or the other. It just comes down to, do we use after-tax money and cash flow, or do we use the tax money that we've set aside in the years where we had the ability to do so?
So if we look at this, if it's sitting in an 831B, do we get any kind of return on it? Or, is there any money that's being earned on as it sits in that plan?
Yeah. So the client can actually invest those funds while the policies are in place. They can be invested into any kind of a liquid investment. So things like stocks, bonds, mutual funds, ETFs, anything that's liquidable or can be liquidated within 2 to 3 business days. Once the policies expire after that first year, those dollars now become surplus and they can invest into really, more illiquid, long-term, aggressive investments if they so choose, because there's no longer potential of a risk on those dollars for a claim. The next year when they contribute, would follow the exact same process, right? Dollars are at risk for that calendar year or that policy period, have to be in liquid type investments, but they absolutely do get to have the dollars invested if they so choose.
So how often, like, what does it look like investing in an 831B? I think the idea is that you take a little off the top or a little off the bottom of your revenue and you put it into that account. Does you do
Yeah.
that indefinitely? I mean, is that the idea, or are you just stockpiling a certain amount of cash and then you no longer need to invest into it?
So it kind of depends, right? Because we work with business owners exclusively. And so we're insuring a business. And so every once in a while, obviously partnerships break up, businesses sell, things happen. But the majority of our clients are using this as a 3 to 10 year, 3 to 15-year planning tool, right? I'm going to have my business for a period of time. I have these kind of uncommon, unknown risks. I'm going to set these dollars aside over here. I'm going to deduct it in the year that I contribute it. And now I have 2 times that amount in risk coverage. Well, now that I've built up reserves, you're going to share, have a claim or two here and there, depending on what comes up. You're probably going to share in some claims along the way. Although it's very nominal, there is kind of the aspect of inside of using the 831B, there's what's called a 4-part test, making sure that there's a proper transfer of risk, making sure that there's a proper distribution of risk, making sure that we're issuing policies that are fortuitous in nature, meaning, things that happen by chance, not ordinary business risks. And then the last one would be making sure that we're following the principles of insurance. And that's really on us as the 831B administrator to really make sure that, we're abiding by these guidelines, if you will. And so that's why we do what we do. We simply try to take a conservative stance on, how these programs are to operate, to make sure that we're not getting anyone to, putting a target on our back or any of our clients.
So do you need an 831 administrator to be able to issue and control these kind of plans? Or should you have one?
Yeah.
Is that the idea? Is that you want somebody that's like you guys that has the knowledge and experience to set them up, manage them, help invest out of them, et cetera?
Yeah, exactly. So, kind of the industry that has used it the most, Fortune 500 companies have done this for decades now, right? But the industry that's done it probably the longest and maybe the most efficient is the auto industry, right? Everyone goes and buys a vehicle. They sell you a service contract and a warranty. They take the proceeds from that and they set it into their own 831B. They deduct those funds that they've set aside now, and they're building up a war chest of dollars to now manage our warranty for the next 3 to 5 years with pre-tax money. Well, the funds that they're not using, they have the ability to loan from to go buy all the cars that sit on their lot and or buy new locations and all kinds of different stuff. And so it's a amazing risk management planning tool. It's also a potential way to kind of leverage those dollars. And everyone's tax plan, if you will, most business owners and a lot of CPAs, their plan is to go, I don't want to just give money away in taxes. So I'm going to go buy a truck. I'm going to go buy a piece of equipment. You see it all the time. It's awesome if you need that piece of equipment, but if you're just spending money to save money, most of the time it doesn't really work. And 07, 08 rolls around, a lot of business owners that were just spending money to save money, they acquired a bunch of stuff that they didn't necessarily need. They picked up a new payment. They picked up something new to insure. And all of a sudden the economy takes a step back and now they don't have the revenues to pay for all this stuff. And so, their buddies are showing up to the auction, buying half of their equipment for 50 cents on the dollar. Those individuals that have set dollars aside like this to really take advantage of an economic downturn or have funds to pivot to when times get a little bit tough, are really the ones that are capable of thriving rather than just trying to keep their head above water.
So give an example, because I think, all indicators are we're looking at an economic shift here this year over next year. So if we look at COVID, the last time we kind of saw a disruption in the economy, Give me an example. Like, how are these plans that you see? Because it's pretty recent. So how do these plans help some people kind of navigate through that crisis?
Yeah, I mean, we had quite a few business interruption claims. Lots of forced closures, mandates. Lots of medical professionals, contractors being told that they were essential, they were non-essential. They're not available to do their elective procedures, or they're not able to run business as usual. Inevitably, their revenue dropped by 10, 20, 30, 40, 50%. And they were able to turn to their 831B, file a claim, and pull funds back into their business to kind of level that dip in cash flow. We saw that a lot with supply chain interruptions, and continue to see it in every industry that we work with. When I said earlier, kind of lost a key employee due to an accident or illness, a key man policy that you mentioned earlier covers someone in a death situation. What this would help with is someone who's out with an illness or an accident. Maybe they went skiing and something happened and they're unable to work for 3 or 4 months. We had a medical professional earlier last year that generated about 75% of the revenue for his practice, and was actually diagnosed with stage 4 prostate cancer. And so he was trying to find a replacement because he was going to be out for a minimum of 16 to 20 weeks, doing chemo and radiation and everything. And so he was filing a claim from his 831B to pull funds back into the business to try and hire a replacement while he was out dealing with his health issues. It's those kinds of things that, they're not traditional risks that can be insured, but they can be devastating to a business. When and if they happen.
Those are great examples. What do you think are the most common ones? Like, when in doing what you do, what are the most common threats that we're not anticipating in business, that we're not getting insured for, that you're seeing these 831Bs, these plans help to pay out for?
We've seen an increasing number of cyber issues, ransomware, malware, phishing. There's all kinds of, unfortunately, brilliant people that are out there to disrupt and destroy businesses. And, you click on the wrong link and all of a sudden you've got yourself an issue. And we see a lot of that. And unfortunately, traditional insurance policies in the cyberspace, they just don't cover much. And there's gaping holes in all of these policies. And so, that's one thing we've started to see a little bit of an uptick in over the last few years. People bring in disputes. I mean, we live in a society where people like to bring lawsuits for anything and everything. And so I think that's definitely a policy that we see utilized maybe more than others. Is someone bringing legal action against them. Started to see, a bit of an uptick in an EPLI policy, or an employee liability practices, an employee bringing legal action against an employer because they feel harassed or discriminated against in some way, shape, or form. It's becoming more and more frequent, unfortunately. And so, the business owner definitely needs to set dollars aside when they can, to kind of manage these off the wall risks. A lot of the things that we see over the last 3 or 4 years, especially, have been things like brand and reputation damages. Social media is, things spread like wildfire, or things can be taken out of context. And, a lot of the time someone reads something, they interpret it one way, and all of a sudden, once it's out there, and things can get out of hand pretty quickly. And so, being able to manage your brand and your reputation is kind of everything to a business. And, if someone says something dumb or does something that just, it can become a problem pretty quickly.
A friend of mine owns a reputation management company, And to speak to that point, like it's upwards of $25,000 a month to like fix the damage from what you're describing. And some places will pay, 6 figures up front to even be able to get started with stuff like that. So really expensive. So it completely makes sense. And that's the thing, is like the stuff that we don't see coming is usually what gets us. And as you become bigger, more successful, it seems like there's more of those threats, which is why so many, as you're saying, the Fortune 500 and these large car companies out there are tapping into this as well. But that being said, who is the best candidate? Like, I mean, are there certain entities that are better fits for this than not? Is it certain revenue that you should have? Like, at what point do you really need to start thinking about having an 831B?
Yeah, that's a great question. So, I mean, we do a lot of stuff with people on their service contracts and their warranties, as well as a way to set dollars aside to manage those risks a little bit more efficiently. I would say our average client sits, about $1 million gross revenue to 30 million gross revenue. Our small clients are probably 7, 8, 900,000 in gross revenue. And kind of general rule of thumb is we're able to take a percentage of those gross revenues, set it aside in each given year to manage these, these potential risks and issues that can come up. I would say kind of a good fit for this type of program is not necessarily how much revenue you're doing. Obviously, kind of that you probably need to be somewhere in the 900,000 gross revenue up to, 30 million. That million to 5 million number is probably really sufficient. But the client that really fits this type of program is someone who has a decent profit margin and has the ability to take some excess revenues out of their business and part with them to set them aside. If they're running super lean and they're not able to, set aside excess cash flows, obviously this isn't going to work. But anyone who has the ability to do that is probably something to absolutely look at.
What about captives? One of the things I've looked at with you guys is what I think it's the importance of 831B captives. So what is that?
Yeah. So captives it's kind of a buzzword that everybody knows, right? And that is the 831B. Everybody uses the word captive. They kind of know what that is or kind of heard of it. That's the 831B tax code. So
somebody's referring to a captive, they're referring to the 831B.
Yep. Yeah, generally speaking. Yeah, there's a lot of different structures. We do things a little bit different. We don't form captives, we form reinsurance companies, but it's still under the 831B tax code. It's just a little bit different on how it's structured.
So one of the other things that I've looked at is, I think, a liability crisis is, I think, what you guys are referred to it as. What is a liability crisis? And we seeing that kind of repeat itself right now?
Yeah, I think so. A little bit. There's definitely a little bit of an influx in how insurance companies are covering specific risks. They're starting to kind of reduce what they're covering, and premiums are definitely going up. And I think that's all, obviously a lot due to the pandemic. There's been lots and lots of issues that have gone on, lots of frustrations from business owners buying insurance that, their business interruption wasn't covered. Insurance companies simply they're not offering that as a risk coverage. And if they were, they wouldn't really know how to price it because, in March through June of 2020, we saw billions of dollars of business interruption issues. So, I mean, the large insurance companies just aren't gathering premiums for those types of risks. And so it's really being left to the business owner themselves to kind of take it upon themselves to figure it out when and if it comes up. And so if cash flow is really tight all the time and you're not setting dollars aside, this kind of can be viewed as kind of a forced savings plan for a business. And I have the ability to do so. So I'm going to set this aside for the what if.
When you mentioned earlier, setting money aside and having the ability to, is there a certain amount of money that you should be setting aside to make this make sense?
Makes sense. I would say
where you actually have enough to be able to cover. I mean, have you found a certain percentage or for an amount? What's the numbers look like there?
Yeah, I think generally speaking, inside of our program, if a client can set aside 75,000 to 100,000 a year or more, it's probably something that makes sense. It's definitely.
So if they're setting aside $5,000, $10,000 a month, somewhere in there, 7,500,000 a year, that makes sense for them to be able to start setting up an 831B that's large enough to protect them for these kind of unexpected.
Yeah, obviously, the more it's all going to be tied to gross revenues, much like traditional insurances, right? So, kind of generally speaking, when the 831B started, farmers were able to set aside 10% of their gross revenue for crop insurances. And so, when we talked with clients, we're kind of looking at that 10% of gross revenue window of, if I'm doing $1 million in gross revenue, I can set aside roughly 100 to 150,000 in premiums into my 831B. If I'm doing 10 million in gross revenue, I'm able to potentially set aside up to $1 million or somewhere in that for risks.
Cool. Well, listen, Clay, I've loved having you on the show today. This has been really informative. To be honest with you, I knew nothing about an 831B until you came on here. And now I think we all have a really good understanding of what it can do, the risk it can help us mitigate, what it's involved with managing and how we can use it properly. But we just kind of scratched the surface probably of everything there is that we could learn. So where else can we go to learn more?
Our website is actually an awesome tool for lots of information. Our website is actually 831b.com. Kind of a historical of the 831B, our program in general. And then obviously myself and our team is very capable and interested in talking to really any business owner that shows interest in this, because, we firmly believe it's going to become a normal business practice.
I love that. Clay, thanks for coming on with us today.
Thanks. Appreciate it.
So listen, if you're watching this, if nothing else, the timing couldn't be more perfect after we've just seen what we've seen with COVID, right? I mean, all of a sudden your business is chugging along and then out of the blue, something completely out of your control completely shuts down businesses. And we saw this across many different sectors with COVID. And the reality is, as Clay said, from what I know, and a lot of people I talk to, a lot of the insurance they had, even if they had business disruption insurance, it did not cover what was happening. And so all of a sudden their business is shut down. Their expenses are still coming in. They have no income or revenue. There's only a certain matter of time. And you tell me, how long could you sustain in your business if all of your income stops and yet your expenses continue and the insurance you thought was there to protect you doesn't, right? So that's just one of a multitude of examples. I lived through the 2008 mortgage crisis and I owned a mortgage company. So I can tell you, it wasn't good. And if I would have had something like this, it could have helped me avoid a lot of pain that took me decades plus to be able to fix on the personal side, because the damage where I didn't have something like this set up. I could go on and on and on, but the realism is that we are currently looking at a shift in the economy right now. So if nothing else, if COVID wasn't a wake-up call, if the 2008 mortgage crisis wasn't a wake-up call, you've got something ahead of you still, and who knows what is further beyond that, that you've got to be prepared for. And this really gives you exactly what you need with an 831B to be prepared, to be able to have that money set aside to navigate these crises, which happen all the time. I mean, I have so many friends that deal with all these kind of things that Clay are talking about all the time, and they're unprepared. So if you want to get prepared, you want to get knowledgeable, make sure you go to 831b.com. If you go to 831b.com, there's a ton of great information here. Podcast amongst a whole other resource section has all kinds of resources that can help you keep informed about what an 831B is, what it can help you, how it can help you, how it works. And you can always reach out to them right through their contact tab and be able to connect with them to talk with more about Clay and his team about how they can help you. Plus, while you're there, go to the bottom right of their website. All their social media links are there, and they're across multitude of different channels. So you're able to get daily tips, daily information from their social channels as well. So make sure you go to 831b.com. Make sure you also subscribe on their social channels, get the free resources, and then talk to Clay and his team. It might be a life-saving decision for your business just to be able to learn more and get started with an 831B plan. So make sure you visit 831b.com.